The last time I traded.
Same shit.
Oh shit.
You're right, you're right.
That's it.
Is that thing closed?
All right. Good morning, everyone. Let me get going here. All right. S&P. You can see Friday we had a quite a solid reversal. It's 2 days in a row that we've had a reversal on the S&P from the opening where we started. And at some point, basically in the morning, I think we were down over 10 points on S&Ps the last two sessions, and we grinded it back to positive. What I would note is the really significant part of that is that it's 2 days in a row that that's happened, and then the follow-on to that has just been a beating out of Asia. And we've had the Nikkei down 3.3%, China down over 2%, kind of across the board. Asia has been ugly 2 days in a row on the back of a good comeback, a good turnaround in the States, which in my mind is really, really bearish markets. And I really have a feeling that either today's session or tomorrow's session in the States can actually get quite ugly. All right, I'll have a quick look here. You can see here what sectors have been reporting positively and reporting negatively. Oil and gas sector has really been the best. Healthcare sector has also been quite solid. Consumer goods has been reasonable. Basic materials has been shocking. Utilities have been shocking. Technology's been quite weak. But for the most part, I think it's important to realize that that earnings growth as a whole has really, really been weak out of the States, and I think that is really the key here, is that without getting some sort of earnings, some significant earnings growth, it doesn't really matter what else is happening. So I think markets are really gonna struggle to move higher up in the near term. All right, let's have a look at Asia. You can see there, like I said earlier, down across the board. Aussie, you can see, was flat, managed to squeak out a 0.03% gain. But some of these losses have actually gotten worse. Japan's down over 3% now. China's down pretty heavy. And you can see that we've gotten some yen strength again. Gone to a 97 handle on the yen, which is really putting extra pressure on the Japanese market there. All right, corporate action today, lighter on the earnings front out of the States. We've got Simon Property Group, which is out before the bell, and then we've got Express Scripts out later in the States. Then we've got from Credit Suisse this morning, Telcom was raised to outperform versus neutral, which is quite impressive. And then today we've got Investec, INL, and INP, which are going ex-div today, so don't forget that if you're trading that on the open. All right, the market data. This is going to be a really, really heavy week of market data. We've got non-farm payrolls. We've got GDP numbers out of the States, and I think maybe even more importantly, we've got 3 Fed meetings that are happening this week. So this is economically, this is a very big very big week for us. Very big finish to this month. Okay, so we had Chinese industrial profits out this morning, weaker than expected. Retail sales out of Japan, weaker than expected. We had M3 money supply here locally, weaker than expected. Private sector credit growth, better than expected here locally. Then we have business confidence out of Italy later, mortgage apps out of the UK, pending home sales out the US, and Dallas Fed manufacturing numbers out of the States later as well. Anyway, okay, so we finished there. Let's jump into the maps real quick. Like I said, quite a lot of weakness out of Asia, considering the reversals on the States in the last few sessions. So I think we have to take cognizance of that, and I think we have to tread very lightly here on the long side in the next couple sessions, or we really set up for the potential of a reversal in the U.S., which I think would just make the rest of the world get even heavier. Okay, you can see here U.S. dollar yen. I mean, this is kind of one of our leading indicators. This along with the U.S. 10-year. You can really see where support is there around 97.10, 97.20, something like that on the trend line. Obviously, this is quite a major trend line that's broken out from a lot of weakness over the past couple years, or sorry, a lot of strength over the past couple years in the yen. So you're seeing this. I think this is going to be a very important level, very key level to see if we can hold support there. It also lines up pretty nicely with some of the pullbacks here that we saw earlier in April. So I think this is going to be something that we're going to want to watch around 97.20, watching the yen. Kumba we've talked about lots of times over the past week, and Friday we finally got the breakdown below 435. We talked about this. No excuses. This is the worst setup I think maybe right now happening in our market that I can see in terms of things that have just broken down. Drop major support here, 435, and I think that even if we were to take the more recent topping pattern here in Kumba from 475, I believe, we'd be projecting a target down to around 395 in the short term. I think long term it can actually even get uglier than this. If we were to see the full brunt of this move to the downside, we would be looking for about a full 100 rand to the downside, which would put our target around 335. So needless to say, things are looking ominous here for Kumba. Unless we can get above this 335 level on a closing basis, I think there's no reason to be long of this stock. And especially with a lot of the fears coming out of China. One of the comments from Barclays over the weekend was saying they were forecasting some of their models to price in 3% growth out of China on commodities in 2 years, and they're calling for a 20% pullback in copper. They were calling for maybe a 50% pullback in nickel. They're talking about oil trading back down to around $70 on potential 3% growth out of China. So this is a lot of these stocks. I think one of the reasons why we've seen so much weakness is because of the fact that the market's looking forward and seeing weakness out of China. So it's very important to realize that. All right. We had a big reversal out of Naspers on Friday. If I can just shorten this up a little bit. It's in fact, you could almost call it a key reversal. You can see here we took out highs. We made all-time highs in Naspers, and then it would have been a key reversal had we dropped below the previous day's low. But you can see there, the previous day's low was 778.88, and we didn't manage to close below that. We did trade a touch below that for a second, but we managed to close at 780.16. Needless to say, this is very bearish action on a stock that had every reason to trade well on Friday. So I really think that this is going to get us down to rather quickly to this breakout here at 760 in Naspers. I mean, as we got above 800 on the open, I mean, there was never any demand that came in for the stock above 800, and as soon as it dropped it never regained it. It just really was a weak effort on a stock that's been one of the strongest on the board. So in my mind, we at least correct here to 760 in the near term, possibly even down to around 746 where our previous breakout was. But definitely a bad day of action out of Naspers, especially following on the back of what happened on Tencent and Facebook. All right, let's have a quick look at some of the banks here. If we can just back this out a touch, all of these banks, sorry, EPSO is not one of the ones I meant to type in here. All these banks are kind of trading down to support on trend lines in terms of the last couple months. After this big downdraft, we kind of had these upward sloping wedge patterns, and they're all kind of testing these levels again. You have First Rand, you got Standard Bank. I think even Nedbank looks similar, but I think these are really important. Next day or two, we drop this little support level, then I think we could see significantly lower levels out of the banks over the next few sessions. And the last one I'm going to show here is going to be MMI, which the other day we had talked about this thing breaking out to new highs. The very next day, it gave that up on a closing basis, and it really has proven to be a bit of a head fake here. On a closing basis, you can see we've dropped out of this wedge pattern here, and moving to the downside. Looks like we've got more room to the downside over the next few sessions. So, kind of a bit of a head fake and reversal at those levels in MMI. And that's it for today, guys. Thanks a lot.